Hey everyone, welcome back to Gold Rush Reporter, your trusted source for everything happening in the world of gold and silver. I'm your silver analyst, and today I'm going to take you through something that very few people truly understand: the global monetary shift that's quietly unfolding right now. We're standing at the edge of what could be the biggest financial reset in modern history, and silver is about to play a role that most analysts still don't see coming. So stay tuned, hit that like button, and make sure you're subscribed, because what I'm about to explain could change how you view money, wealth, and the system we all depend on. Now let's cut right to it. The idea of a global financial reset isn't just some internet theory anymore. It's a reality that's being built step by step by the very institutions that run the world's monetary system. You've probably heard terms like CBDC, de-dollarization, and BRICS currency. These aren't isolated ideas. They're all connected in one bigger process: the slow dismantling of the current US dollar-based financial order and the creation of a new, more controlled system. The problem is, once that transition fully takes hold, the rules of wealth will change forever, and those who aren't positioned correctly will get left behind. Silver's role in this can't be overstated. Historically, silver has always been real money, not just an industrial metal. When fiat currencies start collapsing or losing trust, silver steps in as a stabilizer, just like gold. The difference is, silver is far rarer in available supply than most people realize. Central banks don't hoard it like gold, and yet it's essential for nearly every modern technology, from solar panels and electric vehicles to medical devices and defense systems. In other words, silver isn't just money, it's the backbone of the modern economy. But here's the shocking part. Despite this massive industrial and monetary importance, the world is facing one of the most dangerous silver shortages in history. Global mining output is falling year after year, even as demand keeps setting new records. The US Geological Survey data shows consistent supply deficits, and recycling can't fill the gap. That means the only way to balance the system is through higher prices, dramatically higher prices. Meanwhile, governments and central banks are preparing for what comes next. You've seen the moves: gold accumulation by BRICS nations, discussions of trade settlements outside the dollar, and the growing push for digital currencies. Each of these shifts weakens the dollar's dominance, and when that foundation cracks, investors will run to hard assets they can actually trust. That's where silver enters the spotlight. It's not just about investment anymore. It's about survival in a system where paper promises are losing credibility by the day. And that's exactly why, in the coming parts, we're going to dig deeper into how this monetary reset is being engineered, who's behind it, and why silver's strategic role could make it one of the most explosive assets of this decade. Stay with me, because this story is just getting started. And by the end of it, you'll understand why every serious investor should be paying attention right now. Let's get into the mechanics of what's really happening behind the scenes. The financial system we've relied on for decades is built on a foundation of debt and confidence, not real value. The US dollar became the world's reserve currency after World War II because it was backed by gold. Real, tangible wealth. But once the gold standard was abandoned in 1971, the dollar became purely a product of trust and power. Since then, governments have printed money at unprecedented levels, creating a system that thrives on inflation, manipulation, and artificial growth. But that kind of system doesn't last forever. Every time the Federal Reserve injects liquidity, it temporarily props up markets while destroying the purchasing power of the average citizen. The more dollars in circulation, the less each one is worth. You can already see it: the cost of living rising, debt levels hitting record highs, and savings losing value year after year. Meanwhile, the top 1%, those who understand this system, are quietly shifting into real assets like land, gold, and increasingly silver. They know the paper game can't go on forever. Now, here's where it gets serious. Global confidence in the dollar is starting to erode. BRICS nations, Brazil, Russia, India, China, and South Africa, are actively building trade systems that bypass the dollar entirely. They're not doing this out of spite. They're doing it out of necessity. The US has weaponized the dollar through sanctions and financial control, which has pushed other countries to look for alternatives. The result is a slow but steady de-dollarization. And once that momentum reaches a tipping point, the demand for the dollar will collapse. That's why the West is now scrambling to establish central bank digital currencies, CBDCs. These digital versions of fiat money are not about convenience, they're about control. CBDCs allow central banks to track, monitor, and even restrict how money is spent. Imagine a financial system where your savings aren't truly yours, where access can be turned off or limited with a click. That's the future being built right now under the guise of innovation. And when the reset finally happens, it won't come as an announcement. It will come through gradual steps that feel normal, until suddenly you realize the old system is gone. This is why precious metals, especially silver, are more important than ever. Silver has always represented independence from centralized control. It's physical, scarce, and outside the digital grid. You can hold it, trade it, and store value without needing permission from a bank or a government. Unlike digital assets that exist on someone else's server, silver exists in your hand. No code, no surveillance, no counterparty risk. The irony is that while silver is one of the most undervalued assets in the world, its demand is rising faster than ever due to industrial use. Solar, electric vehicles, AI chips, and medical technology all require silver in growing amounts. Yet global production can't keep up. The market is being stretched thin from both ends, industrial demand on one side and investor accumulation on the other. That imbalance can only end one way, with a revaluation that shocks the world. Now, let's talk about where things start getting really interesting. The supply crisis that's quietly building beneath the surface. Most people assume silver is easy to mine, easy to find, and always available. That's completely wrong. In reality, more than 70% of the world's silver doesn't even come from primary silver mines. It's produced as a byproduct of mining for other metals like copper, lead, and zinc. That means when global demand for those base metals slows down, silver supply automatically drops too, regardless of how badly the world needs it. And that's exactly what's happening right now. Ore grades are falling across major producing countries like Mexico, Peru, and China. Mining output has been stagnant or declining for years, while industrial demand keeps climbing. Solar panels, electric vehicles, and advanced tech manufacturing are eating through available silver reserves at a record pace. According to multiple independent analysts, we're heading toward one of the worst structural deficits the silver market has ever seen, a shortfall that could exceed 200 million ounces per year within this decade. To put that into perspective, the world is consuming more silver than it produces, and that gap has been growing every year since 2018. Recycling can only fill a small fraction of the difference, and opening new mines takes over a decade, assuming permits are even approved. So, what happens when industrial manufacturers can't get enough silver? They start hoarding it. They pay above spot prices to secure their supply. And once that begins, prices don't just rise. They spike violently. Here's where it gets dangerous. The United States imports about 2/3 of its silver, and most of it comes from Latin America. But countries like Mexico and Peru are now reconsidering export policies. Their leaders are openly discussing keeping more of their natural resources for domestic use, especially as they industrialize and build their own renewable energy infrastructure. Mexico's government has already floated the idea of nationalizing its silver mines, similar to how it handled lithium. If that happens, the US mine, already facing shortages, could find itself cut off from the very metal that powers its clean energy and defense sectors. And it's not just about energy. Silver is critical for advanced electronics, medical equipment, and even military technology. Every missile guidance system, radar, and satellite uses it. If silver supply tightens further, prices won't be the only issue. National security could be affected. That's why the US recently added silver to its list of critical minerals, a move that signals the government finally realizes how vulnerable it is. But here's the twist. Even though Washington recognizes the problem, there's no quick fix. Mining projects in the US face long environmental reviews, regulatory red tape, and investor hesitation. Meanwhile, the demand curve is accelerating. That imbalance creates the perfect storm for a supply shock that will make silver explode in price faster than most investors can react. And this is where you need to pay attention. The average investor doesn't see this coming. They're still distracted by tech stocks, crypto, and short-term trades, while the smart money, institutions, sovereign wealth funds, and industrial giants are accumulating physical silver quietly and aggressively. They're locking up supply before the public wakes up. Now imagine what happens when the US finally faces the full consequences of this supply imbalance. The reality is, we've built an economy dependent on metals that we barely produce ourselves. Silver isn't just a shiny investment. It's the backbone of modern infrastructure, and without it, entire industries start breaking down. The electric vehicle sector, solar manufacturers, and even chip producers are all walking on a razor's edge. If tariffs, export bans, or mine nationalizations disrupt silver flow, the domino effect could hit production lines within months. Take Tesla as an example. Each electric car uses roughly 25 to 50 grams of silver in its battery and electronic systems. Multiply that by millions of vehicles, and you realize how fragile the situation really is. If silver shoots from $25 to even $100 per ounce, production costs would skyrocket. Companies wouldn't just face thinner profit margins, they'd face shutdowns, layoffs, and delays. And that's not speculation. That's how supply economics works when an essential input disappears. Now expand that picture beyond EVS. Think of every smartphone, solar panel, and AI chip that relies on this one element. The world has structured its green revolution on materials that are scarce and increasingly concentrated in countries that are either nationalizing them or facing declining ore grades. The US government's move to classify silver as a critical mineral is a late acknowledgement of that fact, not a solution. It's like realizing the ship is leaking when you're already ankle deep in water. And while Washington debates policy and investors argue about interest rates, the smart players are already positioning. Big industrial buyers are locking in long-term contracts. Sovereign wealth funds and energy giants are quietly accumulating physical reserves. You won't see it on mainstream headlines, but it's happening in the background, just like gold accumulation by central banks over the last decade. The pattern is clear. First comes recognition, then panic, then repricing. Silver's repricing phase hasn't even started yet. The signs are visible though. Premiums on physical coins rising, delivery times stretching, and refiners struggling to meet demand. When investors and institutions both rush in at once, there won't be enough to go around. You can already see early warnings from mints around the world. The US Mint has been struggling for years to meet demand for silver eagles. They've had to pause, restart, and even outsource production because the domestic supply chain simply couldn't keep up. It's not just inefficiency, it's scarcity. That same bottleneck will spread across industries as soon as tariffs or trade barriers start hitting. And don't underestimate how fast panic spreads in metals markets. We saw it in 2020 when the global supply chain froze and premiums on silver coins doubled overnight. If something similar happens again, but this time during a structural deficit, we're not talking about a temporary price spike. We're talking about a revaluation. That's when silver stops trading as an industrial metal and starts being treated like money again. That's the turning point, when silver's monetary value reawakens. People will stop thinking in dollars per ounce and start thinking in ounces per value. When the public realizes they can't print more silver the way they print fiat, everything changes. So, here's where everything comes together. Silver isn't just another commodity anymore. It's the foundation of the next industrial era and the insurance policy against the collapse of over-leveraged fiat systems. What we're seeing now with tariffs, shortages, and reclassification as a critical mineral isn't random. It's a warning. A shift this large doesn't happen quietly. Once governments start recognizing a metal as strategically vital, it means they're preparing for scarcity. And scarcity always translates into value. Real, tangible, undeniable value. The market hasn't priced this in yet. That's what makes this opportunity so powerful and dangerous at the same time. Silver is historically undervalued compared to gold, trading at a ratio of over 80 to 1, when historically it's been closer to 15 or 16 to 1. That imbalance can't last forever. When it corrects, it'll be violent. The same investors who ignored silver will be chasing it at double or triple today's prices. But this isn't just about price targets or speculation. This is about protecting yourself from what's already in motion. Central banks are printing record amounts of money, debts are exploding, and inflation has quietly become structural. The dollar's purchasing power continues to erode, while real assets, gold, silver, energy, and land, retain value. Silver happens to be the most accessible of them all, yet the least respected. That will change. The people who see this now, who quietly build their stacks while everyone else mocks them, will be the ones holding something real when the system resets. We've already seen how fragile supply chains are, how quickly markets panic, and how little time people have to react. Don't wait for the headlines that say, "Silver shortage hits manufacturers." By then, it's over. You want to be positioned before the panic starts, not after. Every ounce you hold now isn't just metal. It's leverage against uncertainty. So if you've been sitting on the fence, understand this. Silver's future isn't a question of if it revalues, but when. The math, the fundamentals, and the policies all point in one direction. And when the rest of the world realizes it, there won't be enough physical silver left to go around. All right, guys, that's it for today's breakdown. I'm your host, Said Hashir, and you've been watching Gold Rush Reporter, your daily source for real, no-nonsense analysis on silver and the global economy. If you found value in today's video, make sure to like, subscribe, and drop a comment with your thoughts on where you think silver's heading next. Remember, this channel is about truth, timing, and tangible wealth. Stay sharp, stay informed, and most importantly, stay stacking. I'll see you in the next one.